real quick, let's talk dividends. I also want you guys to stick around because I'm gonna also show you the whopping millions I've made so far with dividends. Anyways, I've been investing in dividend stocks without even trying, but now I think that I'm gonna go all in. Wait, not all in. I'm gonna go a little bit in. Now you might be wondering why. That's because I see now where they can be beneficial, right? So now I have my personal experiences and I want to share that with you guys. Okay, so stick around with me for that. And again, I'm going to show you what I've made. Okay, let's get into it. I found that dividends can be beneficial in a number of ways if we do the right thing or, get the right companies. First off, if you invest in dividend stocks, they actually help to cover bills or grow your portfolio. And I'm talking about when you invest in healthy companies, right? We don't want to just invest in just any company because of their dividend payout now. No, do we? No, we don't. We want to ensure that the company we invest in is moving with us into the future. And in that way, while the company grows, our dividend also grows, right? So that's one benefit that I've noticed. Another one is that when we invest in dividend stocks, we now are not just relying on stock prices anymore. Stock prices do go up and down, but if you're holding healthy, solid companies, those dividend payouts can still come in like a clockwork. That's steady income. So even when the market's being like a little bit moody, you still have your dividends coming in. A good example is what is going on now. Yeah, right. You'll get your dividends still coming in, okay? Once you have a good, healthy company working with, they still come, alright? For those of us who are living in Japan, NISA gives you tax-free dividend gains. Yes, no taxes, as some of you might know. So everything you earn is yours, which is good. We have to be careful. So say for example, if you invest in individual stocks from the US market, the US will actually take tax from that. Let us not go into that right now, but in that case, yes, tax will be taken from your gains. Put the yen down, and even though it is doing a little bit better, with it being down, right, when you get foreign dividends, those hit differently, I'm telling you. So it's like you get a raise without doing anything extra. I'm taking that win, and you should take that win as soon as you can, as long as you can, because if you can get in and get those dividends working, shoot, go for it. Alright, now let's get into what I've earned so far from dividends. If you're watching this and you're not subscribed, I want you to know that it breaks my heart and you are not going to get wealthy if you don't subscribe. Okay, so hit that button, get wealthy, and let me know if you're learning something. It will really help me. Okay, thank you so much. Okay, back to it. My portfolio includes both dividend funds and individual stocks I currently own, as well as those I've sold, covering both international and domestic markets. It's also important to note that if I hadn't sold any of the stocks, my dividend accumulation would look quite different today. So that's another point I want to make, because reflecting on that, I think I've learned an important lesson. So holding on to the dividend paying stocks can significantly shape the outcome. Of course, I did not make billions in dividends. Haha. To get there will take a long time for sure. Dividend investing is not a get-rich trick. We definitely need good positions and continuous investments over long term in our dividend paying companies. Now, as you can see on the screen, I earned 355 yen from my Japanese investment trust. These were automatically reinvested, no tax taken out since I'm using NISA. That's not a huge amount, but remember, it is the power of compounding. Over time, small amounts can grow big. As for my US stocks, I received $12.65 after tax. The total dividend before tax was $14.27. So you can see, as I mentioned before, tax was withheld by the US, which is normal. So even though I'm using NISA, US dividends still get hit with a small tax by the US government, and it's usually around 10%. So that is for last year, right? So in total, let's say 355 yen, $12.65 US, that's roughly 1900 to 2000 yen, somewhere there. So that brings my total dividend income for the year to around 2,300. It is small, but it's a solid start, or should I say it was a solid start towards passive income. Guys, let me know in the comments, are you reinvesting your dividends or cashing them out? For this year, I'm kind of seeing a little bit more growth because I started increasing my dividend positions and I'm putting more money in every now and then. So this one from January 1st to April 14th, right? So 3-ish months. Here's how much I earned in dividends after tax, right? So for domestic stocks in Japan, I earned 32 yen. These are the Japanese companies I directly hold. No tax was taken again, and I got my full 32 yen. For the investment trust, under NISA, I received 1,021 yen tax-free. Small but steady. As for the US stocks, I received $11.50 after tax. Other categories like China, Easy Wrap, and credit adjustments, nothing from these yet. So the total for 2025 after tax is 1,053 yen. It's not life-changing money yet, but it's real and it's growing every month.